Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. Thursday, April 2nd, 2026. The day started on edge, oil ripped above 110, and the first instinct was simple, sell risk. But by the close, the market did that stubborn thing again. It stabilized, it rotated, and the S&P 500 still eked out a green finish. Theme of the day? Elevated crude and geopolitics on one side. Buyers still showing up on the other, just not everywhere. On the S&P Heatmap, this was not a clean risk-on day. It was mixed, it was choppy, just with a green tilt. You could see support in parts of tech and financials, and defensives looked constructive too. But the real story was concentration. Tesla was a bright red anchor in consumer discretionary, and healthcare had some heavy red as well. Even inside megacap, it was split. Microsoft and Nvidia were up, while other big internet names leaned red. That heat map split makes more sense when you follow the money. This was a stress day barbell. Keep paying for AI and compute leadership, semis and select megacap software, while also buying defense in staples and utilities. On the other side, high beta single name risk got punished, and cyclicals like industrials struggled. And here's the twist. Small caps actually outperformed as the market faded that morning risk-off impulse once oil backed off the highs. So the market never really settled the big macro question. Oil stayed high, geopolitics stayed front and center. The compromise showed up in positioning. The index held up, but it did not feel like a full-throated risk-on bid. It felt tactical, AI leadership as ballast, defensives as shelter, and very little forgiveness for execution misses. On the unconfirmed side, there was chatter around CRWV, more about options and positioning pressure than any clean, widely sourced fundamental headline today. And it's important to label that correctly. This is market talk, not a confirmed driver. But it fits the broader vibe. Some high beta theme names can move on positioning alone, even when the headline AI leaders stay firm. Tesla was the loudest red on the board. TSLA fell about 5.5% after first quarter vehicle deliveries missed estimates. And it did not just hit the stock, it weighed on consumer discretionary and on the whole mood. On a day when the index held up, Tesla reminded everyone execution risk still matters, and misses can get punished fast. Microsoft played the steady general today. MSFT was up a little over 1%. No big splashy headline in this recap, just quiet strength. And on a day with oil stress and a Tesla air pocket, that kind of mega-cap stability really mattered for the S&P holding together. Nvidia staying green was another key tell. NVDA gained just under 1%, and on a macro stress day, that sends the same message we saw in the heat map. The market still treats AI compute as core leadership. Not everything in growth was up, but this pocket held. Intel was the standout in chips. INTC jumped nearly 5%, tied to its move to buy back Apollo's stake in its Ireland fab, Fab 34, plus broader turnaround chatter in the background. For the tape that mattered, it added breadth to semis on a day when macro headlines easily could have dragged tech lower. AMD ripped higher, up about 3.5% even while the broader market felt choppy. In this recap, there is no single dominant headline for AMD. The takeaway is positioning. Traders were still willing to reach for AI and compute beta inside tech, even as they bought defensives elsewhere. Here's the interesting contrast. Oil was the headline, but Exxon did not surge with it. XOM was basically flat down just a hair on the day, even with crude elevated. The message here was not chase energy at any price. It was more like price the risk, watch the macro drag, and stay selective. Quick calendar check. U.S. markets are closed on Friday, April 3rd for Good Friday, no regular session. Then next week fills up fast. ISM services on Monday, durable goods on Tuesday, FOMC minutes on Wednesday. Then core PCE and other releases on Thursday, followed by CPI and the University of Michigan sentiment data on Friday. With oil still elevated, traders will be watching whether leadership stays narrow and whether defensives keep getting paid alongside AIM. Bottom line, the market absorbed the oil shock without breaking, but the bid was selective. The S&P finished slightly green, the Dow slightly red, and leadership came from a mix of AI strength and defensive sponsorship. Tesla's drop was the reminder that underneath the index, things can still snap. Heading into next week, it's all about oil levels, market breadth, and whether the same few leaders keep doing the heavy lifting. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.